1. Trump's threat to fire Fed Chair, Wall Street's red line or just bluff? 2. Powell vs. White House, Fed renovation clash and investigation threat. 1. Trump's threat to fire Fed Chair, Wall Street's red line or just bluff? What if the very foundation of financial stability is under threat? Let's explore a scenario that has rattled the minds of economists and traders alike, the possibility that a political figure could destabilize the sacred independence of the Federal Reserve. This isn't just a hypothetical. It's a real-time experiment unfolding in Washington, and the market's response is rewriting the rulebook. But here's where it gets controversial. How much of this independence is actually sacrosanct, and how much is just a myth we've clung to for decades? Back in April, when President Donald Trump casually hinted at replacing Federal Reserve Chair Jerome Powell, the financial world held its breath. Stocks plummeted, and the dollar wavered. Analysts warned that even discussing such a move was akin to crossing a red line. The Fed's independence, they insisted, was non-negotiable. Powell himself dismissed the idea as legally impossible, and Wall Street echoed this sentiment, treating the Fed's autonomy as a cornerstone of economic order. Yet, by July, the narrative had shifted. Trump was photographed with what he claimed was a draft of Powell's termination letter, and yet Wall Street kept calm. Stocks hit record highs, and the dollar steadied. The market's indifference to this apparent breach of norms has left experts scratching their heads. What does this mean? Is the red line a relic of old world finance, or are we witnessing a new era where chaos becomes the norm? There are two possible interpretations here. First, the so-called taco trade, a term for the theory that Trump always chickens out, might be in play. Investors could be betting that Trump's fiery rhetoric is just that, talk. After all, his history of backing down from tariffs and other controversial policies has made by the dip a profitable strategy. But the second, more alarming possibility is that the red line is more of an academic ideal than a legal or economic reality. If the Fed's independence isn't as inviolable as we thought, what happens when the president finally crosses it? And this is the part most people miss. The empirical evidence on central bank independence is clear. As Deutsche Bank's George Saravilos noted, a loss of Fed autonomy could trigger currency collapses, soaring inflation, and market turmoil. Yet, the markets haven't reacted with panic. When Trump first hinted at firing Powell over a renovation dispute, gold and bond yields spiked briefly, but the dollar dipped just 1%. The bond market's vigilantes, who once pressured Trump to pause tariffs in April, seemed unimpressed. Villanova professor Jonathan Doe argues that markets are adapting to a pattern: Trump threatens, markets waver, then the administration softens. Each time, the reaction grows smaller. Is this resilience, or are we simply conditioning ourselves to accept volatility as the new normal? Steve Sosnick of Interactive Brokers offers a chilling insight. Traders might care more about lower interest rates, Trump's top priority, than Fed independence. If investors are willing to ignore political interference for the sake of cheaper borrowing, the system's safeguards are already eroding. Maybe not, Sosnick admits when asked if central bank independence is as sacred as we claim. That ambiguity is dangerous. What if the muted market reaction emboldened Trump to test the waters further? A trial balloon, as Sosnick suggests, could lead to a full-blown crisis. So, where does this leave us? The Fed's independence has long been the bedrock of U.S. economic policy. But if the market's calm response to Trump's antics is any indication, that bedrock might be crumbling. Are we witnessing the birth of a new financial paradigm, or are we sleepwalking into a disaster? The answer could redefine how we understand markets, power, and the fragile line between politics and economics. And here's the question that keeps us up at night: is the market's calm a sign of wisdom, or a dangerous form of complacency? Share your thoughts. Do you believe the red line still exists, or is it already gone? 2. Powell vs. White House, Fed renovation clash and investigation threat. Think government spending is always above board. The Federal Reserve's headquarters renovation has dragged central banking into the middle of Washington's latest political storm, and is raising questions that few people seem willing to answer. Fed Chair Jerome Powell recently found himself defending the central bank's costly overhaul of its iconic Washington, D.C. building, after the White House's top budget official fired off a demanding letter packed with criticism. The core issue: is this renovation a responsible update or an extravagant misuse of public resources? Here's where it gets controversial. On Thursday, Powell responded formally to an overtly sharp inquiry from Russell Vought, Director of the White House Office of Management and Budget, who questioned both the ballooning costs and the very necessity of certain building upgrades. In his reply, Powell directed attention to a newly created section of the Federal Reserve's public website, an FAQ devoted exclusively to the renovation details, cost breakdowns, and project updates. This online resource, he argued, is proof of the Fed's commitment to transparency and accountability. But is posting updates online enough? Vaught's criticism, however, went far beyond concerns about transparency. He accused the Federal Reserve leaders of planning excessive amenities, suggesting there would be private elevators, exclusive dining areas for VIPs, and even a rooftop garden atop the historic headquarters. Powell flatly rejected these allegations, emphasizing in his letter that such amenities were not part of the plan. Maintaining public trust and open access to information is fundamental to our mission, Powell wrote, but will the public believe him? This isn't just about construction costs. Fed watchers know the timing is no coincidence. President Donald Trump has grown increasingly frustrated with Powell and the Federal Reserve for refusing to cut interest rates. Against this backdrop, Vaught's letter reads less like a bureaucratic query and more like part of an orchestrated campaign to apply pressure on the Fed's leadership. In fact, Vaught's July 10 communication stopped just short of calling for Powell's resignation, accusing him of gross mismanagement and even insinuating that he misled Congress regarding the project's status. Bold claims, indeed. Could there be more to the story? What most people miss is the subtle power play. Powell didn't dignify the most inflammatory accusations with a direct response. Instead, he kept a measured, professional tone, offering detailed explanations for the budget overages and repeatedly referencing the FAQ page as the definitive source. He also clarified that the Fed's collaboration with the National Capital Planning Commission, a body that usually doesn't have authority over the Fed's real estate decisions, was strictly voluntary, meant to foster openness, not to comply with a legal requirement. Imagine if all federal agencies went this extra mile, would it be enough to quell suspicion? Yet, despite Powell's efforts to de-escalate, tensions remain sky-high. Vought signaled he intends to visit the site personally, a move that suggests the White House is not satisfied with answers to date. Meanwhile, Republican Congresswoman Anna Paulina Luna of Florida announced plans to ask the Justice Department to investigate whether Powell misrepresented facts about the renovation in testimony before Congress. The stakes? Powell's credibility, and potentially his job, could be on the line. So where do you stand? Is the Fed's renovation a necessary modernization, one done responsibly and transparently, or is it evidence of bureaucratic excess? Do you think Powell should have responded more forcefully to political criticism, or is his calm, fact-based approach the right one for a central banker? Have your say. Should the Justice Department get involved, or is this just politics as usual in Washington? Let us know your thoughts in the comments and join the debate.